Welcome everyone to Daily Mortgage Rates Live with the Mortgage Calculator. We'll wait just a couple of minutes to get started here. Give everybody a chance to jump on, get us a chance to get live on all the different platforms, and then we will get into it. We did put up the chat on the screen in the meantime, so feel free to drop a comment in there as you jump on board. And we will get started here shortly. I see some people already dropping comments in there. Good morning, Mark, Samantha, everybody tuning in so far. Hope everybody's been having a great week so far. It's already Thursday. Definitely going by quickly here this week. Again, for those of you just joining us, we're just waiting a minute here to go live on all the different platforms and then we will get started. Feel free to drop a comment in the meantime as you tune in. All right, it looks like we are live on all the different platforms, so we can go ahead and get started. We will take the chat off the screen there so we can get into it. Welcome, everyone. My name is Kyle Hiersche. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hiersche, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans and investor loans, which is one of the things we're going to talk about here today. Our deep dive topic is SBA loans, Small Business Administration loans. So we're going to get into a deep dive into that here in a little bit with our sales manager, Jose, with 27 years of experience. But before we do that, like we do every morning, we'll go ahead and pull up the actual rates for today from some different programs so we can see the live interest rates for today. So, Nick, let's go ahead up and pull up our pricing tool and see what the market is looking like this morning.
Alrighty, let me switch my screen and we'll get it started. So this is our pricing tool for our team of mortgage professionals. This will show us the general rates and APRs, including all the costs today. It is May 25th, just after 11 a.m. Eastern. Lots of news with all the political stuff going on right now, so lots of markets reacting to that. Unfortunately, not always in our favor, but we will check out the rates today. If you'd like a full loan estimate with all of the different fees itemized, please get with our team members. We have over 300 licensed loan officers and are licensed in 24 states for primary and second homes. And we can do our business purpose DSCR loans we love to do in 44 states, so almost the whole US. Now, for our demos today, we'll set up a standard scenario, 400,000 loan amount. We'll set our LTV to 80% loan to value, 20% down payment for all of our demos. We'll set our desired price to 99. That means we're going to ask the computer to find the best rate at one discount point cost. Most of our customers are asking to buy down the rate a little bit, so that's our typical request. We will compare our conforming conventional programs to our FHA programs, and then we'll check out our expanded guidelines, aka non-QM, where we have over 5,000 additional loan programs using alternative income. We do have VA and USDA. Remember, VA is only for our eligible veterans and active service members. And if you are, we'd love to quote it. But since not everybody is, we don't do that live. And same with USDA. That's only for properties that are in a USDA eligible area. So if you do happen to be shopping in one of those areas, let us know, and we'd be happy to quote it up. So for our first demo, we're going to do conforming conventional. We're going to do a purchase, 30-year fixed loan, standard, primary occupancy, single family home, 1 unit, state of Florida, county Miami-Dade. And for our demos, we'll use an estimated FICO of 760 as we do every morning and an estimated debt to income ratio of 40%. So with these basic settings, let's check out the conventional rates this morning. So it looks pretty much the same as yesterday. Not much has changed. Hopefully we see some downward momentum when we get some good news, hopefully by the end of the weekend here with the government. But right now, 6.875 for 0.875 discount points and costs, and a final APR of just over 7.037. Let's So that is the conventional rates today, about the same as it was yesterday. Now, if for any reason our customer doesn't qualify for conventional, typically the next option is FHA. Or if we just want to compare, we're always going to compare apples to apples here with the APR. So that way we can compare across the different programs. So let's switch back to our pricer, set up the same exact scenario. And all we're going to change is from conventional to FHA. Everything else will stay the same. So we can compare the same scenario for an FHA purchase. So FHA, I believe it's about the same as it was yesterday as well. We have a 6.25 rate for 0.625 discount points and costs and a final APR of 6.830. So we compare the two programs, the APR for FHA for this scenario, actually a little bit cheaper, even though FHA does require yearly and upfront mortgage insurance. It's actually included in the APR here. So definitely recommend our customers out there that are kind of between the two programs. FHA may, in some cases now, be a little bit cheaper. So definitely compare there. Now, if our customer doesn't qualify for conventional or FHA, that's where many other banks and lenders don't have solutions, but that's where we love to come in and offer our expanded guidelines, aka non-QM, where we have over 5,000 additional loan programs that other banks and lenders often don't have. So when we select non-QM, everything else will stay the same, but we have a new option for income. We're able to select an alternative income option. So full doc is what we use for conventional FHA. That's 2 years of tax returns, what most people are used to. So we'll typically choose one of these non-QM programs to select a different option. We have our general options here. We have asset-related options, which don't even require employment, just large assets. We have our business bank statements. We have our investor products we'll talk about in a minute. We have our personal bank statements, which is our most popular. We have VOE, 1099, P&L, no income, all kinds of different options. For our demo today, as we do every day, we will select the personal bank statement 12-month, and that's going to be for our self-employed borrowers. Many times our self-employed borrowers, when they have 2 years of tax returns, will have write-offs and different things that will maybe stop them from qualifying at all or may prevent them from qualifying with as much income as they need for the home that they want to get. So in this case, we're going to, instead of using tax returns for our self-employed borrower, we're simply going to use their last 12 months of bank statements to determine a debt-to-income ratio using their actual cash in the bank statements rather than their tax returns. So in this case, this scenario, we'll use the last 12 months of their bank statements to determine a debt-to-income ratio of 40% using their bank statements. So with these basic settings, let's compare the bank statement options this morning. So very comparable, about the same as it was yesterday as well, but definitely recommend our customers check out these non-QM options. 7.25 rate for 0.875 discount points and costs, and a final APR of 7.312. So remember the very comparable there to the conventional, which was just over 7, and the FHA, which was just under 7. So for just a little bit more cost here, we can solve a lot of problems for borrowers that may be a little bit on the edge there. Use these non-QM programs as solutions for the borrowers that may need a little bit of extra help. Now, if you scroll down here, you'll see we have dozens, if not hundreds of different versions of these programs. So please get with our team. They'll find which one will fit best for you. Some of these may allow things like foreclosures and bankruptcies and other kind of loopholes there that are not allowed on the conventional or FHA programs. So for our final demos, we always want to do some live pricing for investment properties. So we love to work with investors, whether you're a first-time investor or a seasoned investor with dozens of properties. We have some great options here. So for our last demos, we'll switch the occupancy here to investment property, set up the same scenario as before, 80% loan to value, 20% down payment. And we're going to compare our investment property options, our conforming conventional options with our expanded guidelines, aka non-QM. Remember, FHA, VA, and USDA are not eligible for investment properties, so we'll simply compare these two. Start off with conforming here. Everything else is the same as all our other demos. All we've changed here is the occupancy. So let's check out the investment property rates this morning. All right, so it looks like the best option here, 7.375 rate for 3.375 discount points and costs, and a final APR of 7.621. So some good options here for our borrowers that are looking for conventional, but I definitely recommend our borrowers check out the non-QM options, especially because with these conventional programs, the computer's not able to find an option for one discount point and cost. These conventional programs have added some additional penalties. So most of our investors don't mind going a little bit higher in the rate as long as we can lower the discount points, the cost. So that's where we love to present our non-QM solutions. So for the final live pricing demo, we'll set up the same exact scenario for investment property, and this time we'll choose non-QM. And we'll select our income verification first. Most popular option for an investment property is going to be the Investor DSCR program. That's because it doesn't actually require any income or employment from the borrower. We're simply going to use the estimated rental income from the property to determine a DSCR. That's the debt service coverage ratio. So if the estimated rental income from the property covers the expenses of the property and it cash flows positive on a monthly basis, that's a DSCR ratio of 1.00 or higher, aka the property cash flows every month. If the property doesn't cash flow every month, aka the rents don't quite cover the PITIA of the mortgage here, that's a ratio under 1.00, and we still have a bunch of options for those loans as well. So for our demo, I'll always leave this blank, but just know that we have all the various options. And the final thing is a prepayment penalty that is standard on an investment property under the non-QM programs. So we always select 3 years as the standard. We can select zero prepayment penalty here. That will cost more and limit the loan program. So definitely don't do that on the live show here, but we can. And same with the 5 years. Not all the loan programs allow 5 years. When we do have one, it does save a little bit of money, but we always select 3 years since that's the most common so that we can show everybody the most common scenarios. So with these basic setups, let's check out the DSCR rates. So very comparable here. You see our APR is almost identical now on the conventional compared to the DSCR. So pretty much 100% of the applications that we receive for an investor that's looking to purchase an investment property are going to select this program, 7.625 rate for 0.975 discount points of cost. So we solved the problem of the high discount points, and the final APR of 7.691, very comparable to conventional. Ton of benefits you get here with the DSCR loans for our investors. No income, no employment. You can start 1, 2, 5, 10 loans at a time because there is no income or employment. So lots of flexibility. Investors often refinance multiple properties to purchase multiple properties. Just a great program here, especially when you see that you get almost the same rates as conventional right now. So very competitive here for our DSCR options. And if we scroll down, you'll see all these programs vary on DSCR values. Some of them vary on the prepayment penalty amounts. So please get with our team. They can navigate the hundreds of different options here that will fit best for your scenario. If you have a short-term rental property and you need to use short-term rental income, some of these options at a little bit higher rate may allow that short-term rental income. So lots of different options here. Now let me switch my screen and I'll introduce Jose's deep topic for today. Today, we're going to do a deep dive into SBA loans. So very unique product here. Nothing related to what we were just doing, right? Totally opposite. These are commercial loans, but they're for, owner operator, loans, people that own businesses and then want to typically purchase an office or warehouse or whatever their business is using for their space instead of leasing a space. The SBA offers these programs in order for our citizens. Every United States citizen can qualify as long as you meet all the requirements, right, for the SBA, and they will offer this additional support for the banks that offer these programs in order to incentivize our economy with, promoting our entrepreneurs, basically. So if you're an entrepreneur, business owner, instead of leasing from someone else, you can be your own landlord, essentially, with these programs. A couple other little loopholes that I'm sure Jose will go into. So if you're ready, Jose, I'll let you take over and go into the details.
Yes, good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. SBA loans are definitely an important part of our business community. Purpose is to spur economic growth and economic activity. Small businesses are the backbone of our economy. A large percentage of the businesses in existence are small businesses with fewer than 10 employees. Couple of conditions for SBA loans. First, it is for an owner occupant who is occupying at least 50.01% of the space that they're looking to either lease or buy, right?
And by occupy means their business, not them
Yes.
personally.
Yes. The owner occupant business
Yes.
is what we're talking about here. This is all business. This is nothing about primary. So this is like a primary occupancy for the business, where the business is the occupant, and it has to be at least a 50.01% of the available space has to be occupied or being used by the business. That means that they can rent out up to 49.99% of the space.
So they could buy like a couple units in a strip mall as long as their unit is the larger unit.
Correct. Yep. And then in future, as they expand the business, they expand into those spaces. A couple other interesting things to note: SBA loans is they do not have a minimum credit score. Really important to note. They will review the credit. They'll do an actual human being, not automated underwriting, will actually review the credit, how it's being handled, and how it fits into the whole scheme and into the business plan, more likely, right? Because very important for any SBA loan to be properly underwritten is the business plan. You have to have a solid business plan, very detailed. Especially if it's for an expansion of a business or if it's for the purchase of a business that's new, right? There's no track record. So that business plan, that pro forma, is really going to be important in the assessment of this loan. So I have some good examples here for you today. The first example is a mind blower for most people. This is why I like to have it here. This is why we're doing this today, because I want to create awareness of great options that are out there. The first is our 100% LTV purchase. I'm actually getting ready to work on one of these right now, setting it up for a borrower that currently occupies the space. So they don't have to occupy the exact space that they are buying, but they have to be in business for at least 2 years, right? At least 2 years in business, renting a space similar to what they're buying. So if they've been renting a warehouse space for their business and now they want to buy the warehouse space, right? They want to be part of the American dream. They want to create equity and wealth. And we know real estate is the number one way to be able to do that. So now they want to buy their business. So if they've been there at least 2 years in that similar space, and they meet all the other requirements, credit, the business plan, because this is a full doc type program, then you can originate this at 100% loan to value. So that is a great deal. Keep in mind also, one thing I forgot to note in my important points in the beginning, that all SBA loans are variable rate, right? So the rate examples that I'm giving you here today are going to be based on what's probably the worst case scenario, because these rates are going to be based on the prime rate, which has been hovering around 7.75%, 8%, somewhere around there. It's going to be prime rate plus anywhere from 1.5 to 3% margin on top of the prime rate. And where you fall in there is going to depend on obviously things like credit, income, the business plan. I mean, how they view the solidity of the project. That's really what it's going to boil down to. They'll make a determination, rate the file, and give you your interest rate accordingly. So this example here, now talking about what we're talking about, you'd be looking at a rate of roughly 10.75, and that does have a cost of 2 points on that loan program. So your $1 million purchase would be a $1 million loan, and you'd be happily moving on into the world of business ownership. So that's our 100% option. Remember, 2 years in business, occupying a similar space, they could qualify for 100% LTV. Now, this is our more traditional SBA purchase, and it's going to be the same rates. They don't really differentiate on the rates there. Uh, it may be a little bit lower now if they do the 90 versus the 100, but again, they're going to have to size up the whole deal, not just the LTV, but everything. Remember, this is very subjective review by an underwriter that's going to review the business plan and everything else associated with this loan. So this would be 90%, right? And we're looking at around the same rate. Prime plus 3 is what I figured out here. So you're looking at 10.75, which is the same rate as the other one. Now, a couple of other interesting twists here, right? SBA for business expansion or leasehold improvements. Mind you, SBA does not have to have real estate specifically associated with it. So there does not have to have a real estate purchase. There could be a number of things involved here, refinancing of debt or business expansion. So those are two examples I'm going to give here. So in this case, if there is not any real estate associated with it because it's a leasehold, then you're looking at 10-year term on the loan versus a 25-year term on the loan if there is real estate associated with it, because obviously it's going to be a larger loan amount, less risk for SBA when there is collateral associated with it, because the loan that's just for without any real estate, there's no collateral, so that's basically personally guaranteed, and that's it. Hence less years term because higher risk, no collateral. Where there's collateral, longer term because there is lower risk. So in this scenario here, this could be a restaurant operator, for example, has 30 seats in their restaurant, wants to expand to 100 seats. They're going to need money for a build out for those extra space. Maybe it's within the location they have now, or maybe they're moving to a bigger location, right? So all of that is possible with the business expansion option for SBA. And the rates are going to be the same, anywhere from 1.5% to 3% above prime. The difference is 10-year term if no real estate associated with it, 25-year term if real estate is associated with it. So this is a very good option, one that many of you may not be aware exists. And then we obviously have our debt refinance for SBA. Again, same situation as the other one. You're looking at a prime plus anywhere from 1.5% to 3%. So in this example, again, I'm figuring the rate at our higher end, which is 10.75. Really important to note, again, this can be a short-term loan because there's no requirement for collateral to be associated with it. So again, if it's just a business debt, it's 10-year term. If it's business debt plus real estate, it is a 25-year term. And again, a solid business plan is essential for a positive outcome in any of these loans, especially when there's not real estate associated with it. It's just your personal guarantee. So, a lot is riding on the line here with how precise they are filling out those personal financial statements, cash flow analysis, projections, all that kind of stuff. Super important. They'll most likely need to be seeking the assistance of their tax professional or financial planner as well. So 4 good options there for SBA. One thing I want you to take away from this is that real estate is not a necessity for an SBA loan. It can be just a loan to the business, guaranteed personally by the borrower. And note that 100% LTV is possible in a purchase if buying a space similar to the one you've been currently renting for at least the last 2 years.
All right. I don't see any actual questions. Oh, looks like we just got a question pop in if you want to pull that up, Nick. Oh, well, I guess you just kind of touched on that.
Yes, sir. But definitely, you can purchase the business with no real estate. They will finance the same up to 90% LTV of the purchase of the business. But keep in mind, if you're purchasing the business without any real estate, it is going to be a 10-year term on that loan as opposed to a 25-year term if there's real estate associated with it.
All right, perfect. Great programs. The 100% LTV is just a mind blower, right? It's absolutely amazing. So you can reach out to us at themortgagecalculator.com for more info on some of these programs. We do this show at 11 a.m. Eastern every single weekday where we go through the live rates and then we do a deep dive into a different topic, like today's topic of SBA loans. Thank you, everybody, for tuning in. Thank you, Nick. Thank you, Jose. And we hope to see you all tomorrow at 11 a.m. Eastern for the next episode of Daily Mortgage Rates Live with the Mortgage Calculator. Take care, everyone.
Thanks, everybody.
Thank you, everybody.